It's a rare occurrence, perhaps once in a generation, when someone takes certain steps, makes certain choices that will upheave an entire society and unite everyone to a common cause. Some do it with leadership, some with charisma, others do it with stupidity. This is the latter case and is the complete story of Sam Bankman-Fried, the man who deleted billions of dollars in an instant. But fortunately, I have learned to appreciate a humble truth about human beings at times when they feel as though they have lost absolutely everything. Hello, everybody. My name's True Demon, and I am the Devil's Stockbroker. A lot's happened in the month of November this year. I don't think that there is any single event that has caused more turmoil, more damage, and more pain than the complete destruction of FTX, run by Sam Bankman-Fried, who started up this crypto exchange firm in May of 2019, led it through a height of incredible profitability, offering substantial liquidity and availability of all kinds of different crypto tokens to retail traders and institutions alike, peaked in 2021 at the height of the crypto market, and then subsequently crashed into total bankruptcy as of November 2022. I've been debating with myself for weeks on how to present this information to you, and I'm not one to sugarcoat things, so I just think that it's best if I tell it exactly how it makes me feel. The absolute easiest way to put it is that Sam Bankman-Fried is a complete fraudulent bastard. His entire firm was built on the promise of being able to provide a system of liquidity to retail investors of the cryptocurrency markets with the intention of driving change in the world. It's not just that his firm has gone into bankruptcy and in doing so has effectively evaporated billions of dollars of his customers' money. It is the way in which he rose to his position that I find so disturbing and so infuriating. And I find it ironic that I'm going through an article written by Charles Gasparino, of all people, but it's actually rather well written. Gasparino wrote, "The bankruptcy trustee is just starting to get into the mess," speaking on the bankruptcy of FTX. He calls what went down, quote, "the disappearance of billions, massive losses in allegedly segregated accounts in Bankman-Fried's FTX crypto exchange, unprecedented." A very valid comparison can be made between Sam Bankman-Fried and Bernie Madoff or Elizabeth Holmes, both of which were incredible fraudsters of their time. In the case of Holmes, who had created a relatively successful biotechnology firm that developed blood testing devices, it was proven years later through a piece of investigative journalism that all of the results had been falsified, and that everything that Elizabeth Holmes had built in her empire for biotech and her virtue signaling to change the world was all built on a lie. In the case of Bernie Madoff, he had set up a trading firm that was by and large quite successful, at least so it appeared to all of his investors, who kept piling their money into his bank accounts in order to fund his continued, quote, split strike trading strategy. It was a proven strategy up until the point when it suddenly didn't work anymore, and Bernie Madoff started losing money. In order to shore up his losses, he began using new investors' money to pay out other clients who chose to withdraw. And this was how he was able to keep up the appearance of ongoing returns, because he was able to pay out his withdrawing clients much, much more money than was actually present, while he continued to lose money playing the market to his favor, debatably using tactics such as insider trading and front running, largely believed to be due to his position as the head of the Securities Exchange at NASDAQ. Ultimately, it was the result of the housing crash in 2008 that revealed his fraud when all of his clients attempted to withdraw their funds at the same time, and it was left with no choice but to admit that he did not have the money. In the case of FTX, this may perhaps be the greatest Ponzi scheme ever elaborated. I'll take you to the beginning of Sam Bankman-Fried's start, which began at Alameda Research, which he started after quitting his job at Jane Street Capital and moving to create his own quantitative research firm. Quantitative analysis and quantitative trading is done entirely with computers and algorithms and relies upon extremely expensive hardware, technology, and ever-growing complexity of trading strategies. Specifically, Alameda Research was designed from the very beginning to be an arbitrage trading firm, specifically in cryptocurrency. The most successful thing that Alameda was able to do was it was able to identify across different exchanges and multiple markets pricing differences between the single cryptocurrency. In one particular instance, Alameda Research was able to uncover a $20 million opportunity to commit arbitrage, which is not illegal per se, but rather takes advantage of deficiencies in the trading systems in order to afford the executor a risk-free trade, essentially. By being able to monitor both the US and the Japanese market, Alameda Research was able to identify a major pricing mismatch between Bitcoin in the US and Japan. As a result, they were able to instantaneously jump on the opportunity, making a $20 million risk-free trade. Upon the success of Alameda Research, FTX was born very shortly thereafter. Sam Bankman-Fried and his partner, Xiao Gary Wang, founded FTX in May of 2019 and started trading with Alameda Research alongside of it, putting FTX up as a crypto exchange, which was able to attract customers to trade on their platform using Alameda Research as their market maker. There was a massive debate as to the legitimacy of this, but it was largely kept under wraps because of the lack of transparency and the lack of understanding of the connections between FTX and Alameda Research. 6 months after they got started, Changpeng Zhao of Binance purchased a 20% stake in FTX for approximately $100 million. This gave FTX the liquidity that they required in order to start up a fully autonomous crypto exchange using Alameda as the primary market maker for all of its cryptocurrency exchanges. From that moment forward, FTX had money pouring in from all sides. They were able to make major purchases, including Blockfolio for $150 million, moved their headquarters to the Bahamas in September of 2021, and started their own venture capital firm known as FTX Ventures on January 14th, 2022, precisely at exactly the moment that Bitcoin and all major cryptocurrencies began taking a magnificent in the market. It was right around this time that Alameda Research started hemorrhaging money. And in order to shore up its balance sheet, they began to dip into FTX customer funds. This is where conflict of interest becomes outright fraud. And it's very obvious based on the investigation that there were clear loopholes and exemptions made to Alameda Research for their position and their link to FTX, which was done so intentionally, specifically using them as a liquidity provider, and where it was proven by John Ray, who is now the acting CEO and affecting the bankruptcy of FTX right now, discovered that Alameda had a secret exemption from FTX's auto liquidation policy. This is the policy that affects margin calls, and essentially, there were no margin calls ever intended to be made against Alameda Research. The entire point of this was to hide the losses until they could fix it, but they never did, and they only continued to lose. As a matter of fact, it gets much worse because there was further evidence to show that Alameda Research amassed massive amounts of crypto tokens ahead of FTX announcing the decision to list them, knowing that this would create a move and give them an opportunity for arbitrage to sell all of those tokens into the market at highly inflated prices because they already had amassed a huge quantity of them. So now we have added insider trading to the list of charges. According to sources by the Wall Street Journal, FTX lent more than $10 billion of its own customers' assets to Alameda Research in 2022. Alameda CEO Caroline Ellison disclosed to other Alameda employees that she, Sam Bankman-Fried, Gary Wang, and Shah Singh knew about this decision. When things truly fell apart was at the moment that somebody caught wind of all the bullshit. Binance, in particular, was in a unique position because of their relationship with FTX, and there was also plans by Binance to make an acquisition. But let's back up just a little bit. There's something very special about FTX in that it has its own token. Like many other exchanges do, such as Binance's Binance token, FTT, the official token for FTX, was a major use of transaction fees and provider of liquidity for all of the users on the FTX exchange, particularly Alameda Research. It was revealed in a CoinDesk report that a massive portion of Alameda Research's assets were held in FTT, the FTX token. And it was at that point that they got a hold of Alameda's balance sheet, which showed 3.66 billion of quote unlocked FTTs were available, but there were $5.1 billion worth of FTT tokens in circulation. And unsurprisingly, when Binance got wind of this, they realized that there was something wrong. So they announced that they would be selling all of their FTT. This immediately resulted in a run on the exchange, and it caused the entire FTT token to go worthless in just a matter of hours. This moment marks the death of Alameda Research because most of its holdings were not just FTT, but everything was collateralized by FTT. And what do I mean by collateral? Collateral is the positioning of an asset as a backup in case other assets depreciate in value. In plain English, it means that if you owe me money, I need to hold on to some collateral that you claim has intrinsic value. So, if you owe me money, I might demand that you give me a pocket watch that's made out of gold because it has intrinsic value. I will hold on to this pocket watch until you give me back my money. If you do not give me back my money, I will keep the pocket watch. This is the concept of collateralization. It affects security on a loan. In the case of FTX and Alameda Research, Alameda was using FTT as collateral for other assets, which it had been borrowing from multiple other firms, creditors, and debtors. As soon as FTT evaporated, everybody wanted their money back immediately. Alameda didn't have it. And because the collateral value of FTT had effectively gone worthless in the time since that announcement, to the point where somebody was calling every 3 seconds to get their money back, there was no way that Alameda was ever going to be able to return the money. Between the massive sale by Binance and the run that occurred on FTT token in the following days, nobody wanted to touch the stuff. And the bank run, or very much like a bank run on the exchange, this event resulted in an estimated $6 billion liquidity crunch that sent FTX to its doom. As an immediate result of all of this, Binance undoubtedly backed out of their deal to acquire FTX. It wasn't long after this that the SEC and the Commodity Futures Trading Commission, or the CFTC, jumped into investigation mode and started pounding down the doors at FTX. As the entire circus began to unravel, FTX, specifically its CEO, Sam Bankman-Fried, went to multiple other firms, including Kraken, in order to try and work out a rescue deal that would provide them with the necessary liquidity in order to remain solvent for the duration of the year and hopefully rescue its funds. The situation was made worse when it was revealed definitively by the CEO, Caroline Ellison, that much of the money that Alameda Research was holding was on loan from FTX. So not only had Alameda's balance sheet been completely destroyed, in doing so, they also destroyed FTX's balance sheet. And it was made worse by the fact, even still, that most of that money was customer funds. See, all of that would be bad enough. But then you begin to look back in history and you remember that it wasn't so long ago, in fact, just a few months, that SBF was promising to donate a massive portion of his fortune. SBF started donating huge sums of money to political parties and interest groups, lobbying for preferred terms on cryptocurrency regulation that would afford firms like his much more leniency from the US federal government, and the entire time preaching that he was some beacon of humility. Oh, the guy drives a Toyota Corolla. He lives far beneath his means. He wants to donate all of his cash. He wants to change the world. He shares a penthouse with 10 of his roommates and cooks on his own. He shares a Netflix account with his parents. But sadly, the reality looks very different. Everyone, even from Sam himself, always promised that he was going to do everything in his power to change the world for the better, making all of these sweeping statements about he wasn't tied to any one party, that he wasn't limited to supporting a single word or a single political group, that he was looking to make changes across the globe that would be better for humanity as a whole. According to his own brother, he, quote, cares about ideas that would make the world a better place. And now that sounds trite, but without naming names, I think a lot of large donors don't. They care about supporting their tribe, whatever it is. Before this entire blow-up happened, the only thing that you would ever see about Sam Bankman-Fried on the news or anywhere else was that he was trying to preach about effective altruism, making changes in the world through all of the money that he had amassed through all of his ventures, through FTX exchange and Alameda Research. So what went wrong in all of this? The thing is that Sam made a lot of promises about his character. In fact, he really used it as a PR tool in order to drive people to believe in him, and what he was doing is I'm not sure, a petty mission or a campaign to set himself up as a leader of the free world, or just to draw more customers in that believed in what he was doing and working to support his company and be more amenable to working with him. In the text interview done by Vox, it was asked of Sam, I'm sort of putting together a picture where you don't believe anyone is doing anything good for reasons. In response, basically, to his distrust of regulators. You don't believe the good guys are good, so why not make it big and then be the one who gets to decide what good is? And if you have to do sketchy stuff along the way, everyone else is doing it too, and plenty of them are worse. And people still like them as long as they win. In his response to that, he said, there's, quote, some truth to it. But it's also true that I didn't want to do sketchy stuff. There are huge negative effects from it, and I didn't mean to. Each individual decision seemed fine, and I didn't realize how big their sum was until the end. But that's really not how it reads once you read the report by Mr. John J. Ray III, current Chief Executive Officer acting in the interests of FTX creditors and debtors in order to effectuate the Chapter 11 bankruptcy that FTX is currently in the middle of. In a recent court filing in the Chapter 11 bankruptcy proceeding in court by Mr. Ray, who has supervised historic financial restructurings in cases involving criminal malfeasance, specifically the Enron scandal, called the situation facing FTX, quote, unprecedented, stating, never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as has occurred here. It was very clear by the report that was made by Mr. Ray that FTX was willingly and intentionally using its customers' funds in order to supplement the balance sheet of Alameda Research, and it was clear that they were extremely irresponsible with that money based on the types of risky bets that they made. And upon hearing it, as you would expect most customers would, they demanded their money back, a full $5 billion asked for on a single day, the largest ever asked by the exchange. And after promising that all of these reports were, quote, unfounded, and that FTX was, quote, highly regulated, that it's been processing billions of dollars in deposits and withdrawals, just 2 days after that statement, FTX paused all customer withdrawals and locked their money. Anybody who hadn't taken the sign and moved immediately to panically sell their assets and get them the hell out of the exchange lost everything. And this is going to be the continued story going forward as more firms like Voyager and Celsius and FTX go bankrupt, because everything that FTX has touched is toxic. I personally have friends that had money tied up in Voyager that lost everything. And now I have more people in my own community that have lost even more from FTX. The result of this entire debacle is undoubtedly going to lead to a massive loss across all individuals who have ever held their money in crypto assets. It will result in a massive loss of trust in cryptocurrency. It will cause it to lose legitimacy, and it will cause people to lose their homes. People who have been investing for years in cryptocurrency, believing that where they put their money, they would have the ability to take it out if they ever fell on hard times, if they ever needed it, have now had their entire reality shattered. And as this implosion continues, it's going to cause irreparable damage to not just Bitcoin, not just FTT token, but all cryptocurrencies, the entire community, the entire driven movement of cryptocurrency and its mission, decentralized currency, will be damaged. And now because of this, just like the other exchange crashes and frauds before, everybody is asking, should crypto continue? Is crypto bad? Is crypto even worth investing in? I don't think it's safe. And people are asking themselves this all the time because people like this son of a keep using it as a tool to get themselves rich at the expense of all their customers because of the lack of regulation, because of the lack of oversight, and because nobody even understands how the technology works. Don't mistake me for somebody who doesn't love crypto. I love what crypto has done. I love the concept of it. I was one of the earliest investors in crypto. Sadly, I didn't hold. I wish I had. I wish I had learned then as a kid what I know now about holding onto your investments and believing in the potential and the accrual of the value of something that is truly unique and powerful. But this is not the case here. Sam Bankman-Fried used tools that he had gained from other hedge funds and other capital management firms in order to create his own firm that would be able to abuse the system from the very beginning. He used those abuses in order to create risk-free money, and he did that with that money, create a new type of system which would be able to allow him access to billions of dollars of his clients' funds, which he would then subsequently misappropriate, supply methods for him to move funds to other locations, to other bank accounts, supply loans to other individual firms, pass money to friends, and supply himself with a narcissistic narrative that would prop him up as the golden child of the world that everybody should worship because he's actually going to change the world, unlike all of the politicians who are in power right now. What I have concluded from all of this is that Sam Bankman-Fried never truly had any intention to live out his altruistic message. Because if he had done so, if he was so committed to doing things the right way, making himself rich in order to change the world, he would not have allowed himself to make the types of mistakes like moving other people's money to other bank accounts where you can send it out and lend it out to your friends to gamble with. It is up to each investor what they do with their own money. It's one thing to bet your own cash and lose it all and be left sobbing to yourself with the mistake that you've made, but knowing that it was your mistake and that nobody else had to be hurt by it. That is one thing. What Sam Bankman-Fried did was take billions of dollars from hundreds of thousands, if not millions of people in order to use that money for his own gain, having no control over where the money was flowing and allowing all of his coworkers to move the money with no oversight, no regulation, no accountability. The fact that the new CEO found out that all the members of FTX, not just some, but all of them, were encouraged to use systems that would automatically delete their messages and therefore leave no possible paper trail for anyone to follow whenever transactions were being made. That fact alone speaks volumes as to what he was willing to overlook. You cannot pretend that that would not raise eyebrows, that if there was no paper trail, if there was no audit policy, if there was no accountability, if there were no signatures on any particular transaction for any money moving anywhere in the market, that that would not immediately result in a panic. Because ask yourself, if you found out that your money was being handled by a bunch of college dropouts sharing a penthouse together that costs millions of dollars, we're moving your money in the market and we're using auto-deleting messaging apps to signal and instruct each other on where and how to move money, what the hell would you do in response to that? I can guarantee that the last thing on your mind would be send them more. The entirety of FTX's money was in control of just a few members of the leadership. And there were multiple methods that they could use to move money anywhere they wanted. And they did so with gross negligence and incredible liberty. It was so bad to the point that none of the financial statements could be reconciled. And none of the debtors believe that any of those financial statements are accurate. They had no way to predict that they would be losing liquidity in the future at their current pace. They didn't have a list of bank accounts or any signatories with authorized access to move money to and from those accounts. They had no idea of what their credit worthiness would be in the future if they ever needed additional liquidity. They didn't even have security controls on the digital assets they were holding. It is very clear to me that this system, this exchange, this research firm, from the very beginning, was set up in a way that was clearly intended for fraud. And any promises that SBF ever made that he would use that money appropriately in order to change the world for the better was entirely fabricated. There is nothing about the guy that is altruistic when you are taking billions of dollars from hardworking people and other institutions with the promise that they will be able to access that money as they wish at any time to invest at their own will and discretion, and to turn around, take it, and move it to a separate bank account and pretend that what you do with that money, because you have altruistic intentions or have virtue signaled yourself into the limelight, that all of your intentions are for the best, and that what you do with that money is ultimately what everybody should allow to happen because it's what's good for everyone. Well, Mr. Bankman Freud, you have essentially set yourself up as a dictator with access to a massive treasury. And that's just not how the world works. In the real world, we have to have a sense of responsibility and accountability. There is nothing that you can say in your interviews, and there is nothing that you can say to your debtors that will ever rectify this situation or give you an opportunity for redemption in the eyes of the world, because you have essentially robbed it. But it is not lost on me that SBF may be one of just a few bad actors in this current world, because believe it or not, I'm sure he's not the worst. Yes, he's lost the largest sum of money that we've seen in decades, and he did it entirely with fraud and a promise that he was one of the good guys, but he is not the only one. Many of you may recall when I did this video on wealth shown to scale that illustrated the total wealth of the richest individuals in the world and how so much of it could be used in order to change the world and how we live if it was just properly taxed, honestly. You wouldn't even have to take all of their wealth. You wouldn't even have to take a third of their wealth. You wouldn't even have to take a tenth. Less than a tenth would be able to solve so many problems on this planet. And I know that most of these individuals are holding on to this wealth because they worked hard for it, they built businesses. But what we must really ask ourselves is, what is the ethical cost of trusting all of these individuals holding on to these massive sums of wealth, promising altruistic motives and intentions, and then we turn around and find out that they are just incredibly fraudulent, and that really all they're doing is just amassing a high score in the game of life using money as the point system. I'm really tired of watching the world burn in front of my eyes because it's in the hands of some incredibly irresponsible, inexperienced, and extremely selfish people. And knowing that the most money that I should ever expect to have earned in my entire life, not have, but to have earned in totality in my entire life, is approximately $1.7 million. And that while we're just scrounging around in the muck for our daily rations, trying to get by, or trying to find medicine for our families, struggling every single day, they're laughing from their towers where these problems don't even exist to them. To all the people who have essentially lost everything that they ever put into FTX, including Tom Brady of all people, I'm really sorry. I'm sorry that this is how our system functions. I'm sorry that people like SBF, Bernie Madoff, Elizabeth Holmes are able to get so far so quickly, and then at the height of their empire cause it to all come crashing down, and the whole way clawing and tearing things to pieces around them in the wake of their downfall. It's a rare occurrence, perhaps once in a generation, when someone takes certain steps, makes certain choices that will upheave an entire society and unite everyone to a common cause. Some do it with leadership, some with charisma, Others do it with stupidity. This is the latter case, and is the complete story of Sam Bankman-Fried, the man who deleted billions of dollars in an instant. My heart really bleeds for the thousands of people who are going to be dragged to hell by the actions of SBF and his friends that started Alameda Research and FTX. I'm sorry that the regulations don't work, and I'm sorry that the politicians don't know or don't care. But fortunately, I have learned to appreciate a humble truth about human beings at times when they feel as though they have lost absolutely everything. So I want to leave this video on this note. Some of the most painful lessons in your life may be the thing that changes your life forever. And often it can be the best. That the harshest and most difficult time in your life can become a tool, and it can be fuel to drive the engine of your future. Do not let what happened with FTX and how it may or may not have affected you and people you know be what defines how you view the world from this point forward. The world of finance is very bloated and corrupt. It is difficult to win. It's extremely difficult to want to persevere and keep going. But it is worth it to keep going, because every painful lesson is a valuable one that can teach you how to avoid these mistakes in the future. And it can be an example of what you do not want to be. People like SBF who claim they want to change the world and figure out ways to manipulate others in order to bring them there, they do not last. And the society that we've built is running out of patience and tolerance for the people who defraud and belittle us for the sake of something as petty as money. I have come to believe in something about this community that we built at Hell's Trading Floor. After watching all of the turmoil that has happened in this entire year since we started, there is an incredible opportunity in front of us every single day to see and create the change that we wish for the world. It will be difficult, it will take time, it will take training, and it will take a lot of patience. You will have people that will tell you that it's a waste of time. You will have people trying to beat you down, and even when you win, there will be people who are against you. I have figured that out firsthand. But our society is a democratic society built on the strength of the whole, the power of many individuals coming together in like-mindedness for the same mission of achieving self-sufficiency, independence, and to see that ultimately the world is left a better place once they leave it. That is what I want to see happen here. Now, obviously, there's going to be people that stand in the way of that, but don't ever let them stop you. Thank you all for listening, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.